How much do tax lien certificates cost? Well, we're going to talk about that for the next few minutes. And you can buy tax lien certificates for $500. You can buy them for $5,000. And if you buy big office buildings downtown that don't pay their tax, you might spend $100,000. So welcome back. In this episode, I'm going to answer your question. How much do tax lien certificates cost? Now, my name is Ted Thomas. For the past 30 years, I've been involved in tax lien certificates and also tax defaulted property. So we call those tax liens and tax deeds. I'm going to be here to teach you for the next few minutes. I'm going to give you the nitty-gritties and the inside of it all. And you're going to learn how to make money at the rate of 16, 18, 24, up to 36% interest. Now, before I finish this video, I want to tell you about two big mistakes that people make at the auction. So kind of hang in with me, and I'll be right back. Well, instead of making 1% at the bank, let's see if we can figure out how to make 12, 16, 18, 24% on government certificates. Now, these certificates have been around for well over 200 years. This is a business of abundance. You can buy these certificates in half of the states in the United States. There's over 3,000 counties. Approximately half of those counties will sell tax lien certificates. You can buy those certificates and pay someone else's taxes. Now, when you do that, you're really going to get yourself ahead. Why? Because the generous rates of return. These are actually outrageous rates of return. So let me explain what is a tax lien certificate. It's nothing more than a local tax collector trying to collect money on a defaulted property. Now, let's say the property is a defaulting home, and the property owner has not paid their taxes, and they have given them due process. That's called due process and notice that if they don't pay, they'll suffer the consequence, and the home will have a tax lien certificate issued. When that certificate is issued, that means someone didn't pay the tax. So anybody can pay their tax. So what you're doing when you pay that tax, you're paying the county that they need to run the county. You're basically lending money to the county, but your security for the loan is actually going to be the property. So if you own a tax lien certificate, you now control the property. You do not get possession. They leave the homeowner in the property so that it can recover. Maybe they lost a job. Maybe they had sickness. Maybe their children are in the hospital. They get a chance to recover. So they're very benevolent. They don't throw the people out of the property. However, the people have a short time to pay the tax. Now, the tax could be due in 6 months. It could be due in a year. It could be due in 2 years. Each county is going to set their own limits. But if you own the tax certificate, you now have a secured investment. You have paid someone else's taxes. You didn't give the money to Ted Thomas. You invested it directly with the county. So the county is going to maintain your money and make sure it's safe and secure. So you don't have to worry about your money. Now, why does the county want this money? Well, that's important that you understand that. The county needs money to run the wheels of government. The lubrication for those wheels is money. So what do they do with the money? They pay the police department. They pay the fire department. What else do they do with it? They pay the school teachers. They fix the roads. They have to pay all the county employees. You're getting the idea. So the county has a lot of bills to pay. Now, nationwide, we have 3,000 counties. Half of the counties will sell tax liens. Now, they sell a tax lien. That probably means the state and the county are benevolent because they don't throw the people out. They'll let the people stay in possession. However, you don't get possession. You get a tax lien certificate. That means you control the property. It can't be sold. It can't be remortgaged. Nothing can happen on that property that will transfer it until you get paid. So that's like a guarantee for you. What will your rates be? Well, states have different rates. Some states, it's 16%. Lowest I've ever seen in recent years is 12%. Highest I've seen recently is 36% in Illinois. So you can buy any of those states you want, and you can do it online. What you're doing when you buy a tax certificate is you are paying someone else's taxes. In return, the government gives you a certificate. That means you now control the property. You have a safe, secure certificate. Now, how do you find out about these sales? Well, they're basically in the newspaper. They're advertised in the newspaper, and all counties will advertise on their website. So they're going to have tax lien certificate auctions every single year. Now, these are public auctions. So when the person doesn't pay their tax, the local county will announce it in the newspaper, and they announce that it's going to be a public auction. So you or anybody you know can go in and pay those taxes. Keep in mind, the property owner is not evicted from the property. They stay there. So they're going to stay there until such time as they pay the tax. If they don't ultimately pay the tax, you will get the property. Now, how is that going to happen? Well, the government says if you buy this tax certificate and give us the money to pay the taxes, if these people don't come in and pay, you own the property. Now you're saying, what about the mortgage? Well, every one of these properties is probably going to have a mortgage on it. So what happens to that mortgage? Well, the mortgage is deleted. It's wiped out from the property. The tax collector can take the mortgage and knock it off the property. Now, does that mean that they're going to get the mortgage and tear it up? No, they're not going to do that. The mortgage is still against the property owner, or whoever signed the promissory note still owes that money. So those people aren't getting away without paying, but you're getting the idea. All right, so if you're involved in this transaction, you're one of the good guys. You're wearing the white hat. What does that mean? It means that everybody's a winner. The county's very happy because you bought the certificate. Now they can pay their bills. The property owner is even happier because they don't get evicted from the property. So now they have got time to, get over the sickness they had, or get over an operation, or fix a car that got wrecked with no insurance. They're going to be able to take care of their bills. All right, once they take care of the bills, according to most treasurers, 97% of all the people will come in and they'll pay their taxes. Now, is that good? That means you're going to get paid everything that you invested plus the high rate of return. So everybody does well. You make a high rate of return, the property owner is doing well, and the county is doing well. So keep in mind, if you don't get paid, you're going to get this property. So look at the property before you invest. Don't buy an old junk property. Only buy good properties. All right. Now, the county treasurers will tell everybody that 97% of certificates are going to come in and pay you. That means they redeem, and you have to give the certificate back to them, and they're going to pay you whatever was due, whatever you invested, plus one of those high rates of returns. Now, I've seen investors invest a small amount as like $10,000 or $11,000 and end up with a house that's worth close to $200,000 because the people didn't pay their taxes. Now, I don't know what happened to them. They could have passed on. They could have just moved away and didn't ever get the tax bill. Many things happen to people because life happens. We don't know all the things that are going to happen, but I know one thing will happen. If you don't pay your tax, they're either going to confiscate your property or they're going to issue a tax lien certificate. So today, I've been talking about tax lien certificates. Anybody can buy them. There's all sorts of amounts. You want to start at $500, you can do that. You want to spend $50,000, you can do that. They'll all be listed. They'll be listed in the newspaper, and they'll be listed on the county website. All right, what kind of earnings? 16, 18, 24. Lowest I've seen recently is 12%. So you can figure out very quickly, this is a powerful way for you to make money. Now, before I finish, I'm going to do 2 questions. Well, Iowa will pay you 24% on a certificate. Texas can pay you 25%. And in Illinois, you can earn all the way up to 36% on a tax lien certificate annually. Well, I don't know if I'd want to do multiple states. Why not just buy all of them at one auction? When you go to some of these auctions, if I show you a newspaper here, this is a newspaper from Tampa, Florida, and they had 40,000 certificates. Why would you want to go anywhere else? Just learn that auction and buy them there. But if you want to buy in any state you want, you're welcome to do that. I talked earlier about 2 mistakes that investors make. Not only newcomers make them, but experienced investors do the same thing. So I'd like to see you be able to avoid these 2 mistakes. And what are they? They're at the auction. And what people do at the auction is they get all excited, they start bidding, but they haven't looked at the property. If you haven't looked at the property, you could end up with a chicken farm. I don't think you'd want that property. You can end up with a property that's been damaged in a hurricane. What if there was a fire? The point is, don't buy what you haven't seen. I always say to my female investors, look, you wouldn't marry the guy if you hadn't seen him. Certainly don't buy a property if you hadn't seen it. So that's it. Mistake number 1. Mistake number 2 is almost the same thing. People get to the auction, they got lots of excitement, they're determined that they're going to make money, and so they start bidding. Well, you don't want to just look at a number on a list and start bidding. You want to have looked at the property, like I just mentioned, but you also want to have planned what are you going to do with that property. So I call that the exit strategy. What is your exit strategy? You don't want to just start bidding to win the auction and bid high. If you do that, where are you going to end up? Well, you'll end up owning something at a high price. Well, you can't sell at high prices. That's not going to work. Those 2 mistakes at auctions you want to try to avoid. Now, I have a gift for you. It's right below me. It's absolutely free. You can just sign up and register, and you'll receive that gift. And what will happen is you'll get information on how to make money with tax lien certificates and tax defaulted property. So just sign up below.